Okay, this is the last video for this chapter in Accounting 230. We're going to look at all the financial statements together and see this interrelationship between them, okay? That's called articulation. Articulation is the interrelationship between the financial statements, okay? So I have all the financial statements here on the board. Now they're not complete financial statements because I didn't have room to write complete financial statements, but they're just examples of the financial statements and the titles. So right here we've got the balance sheet. Now this balance sheet is from last year, okay? It's not the current balance sheet, that one's over here. So we're looking at this over time. So if we're looking at time here, this is the balance sheet at December 31st, 2000, oops, I got a mistake here. I want this to be 2013. Okay, so that's the end of the year, 2013 from the previous year, all right? And in this balance sheet, you're going to have your assets, your liabilities, your equity section, okay? Now, this is for at a point in time, all right? This is the balance sheet, what the value is for assets, liabilities, and equity at an exact point of time, December 31st. These financial statements, statement of retained earnings, the income statement, and the statement of cash flows, these are financial statements that take place over the year. So we're looking at the year of 2014 in my example, okay? So for the year 2014, the cash flows that took place that entire year, the income statement, the revenues and expenses that took place the entire year to get to our net income, and lastly, the statement of retained earnings, the activity that took place during the year of 2014. Based off of this information then, we can then get information to prepare our balance sheet for the year end. Once again, now it's a point in time, the year end, December 31st, 2014. What's the balance of cash on that date? What's the balance of all of our assets? What's the balance of our liabilities? Okay? So now let's take a look at this interrelationship. In the balance sheet from December 31st, 2013, there's cash in there and there's retained earnings. This cash balance, if you recall, in our statement of cash flows, it has the beginning cash balance. So we're taking the beginning cash balance, which is actually last year's ending cash balance, and we're moving it over here to be the beginning cash balance. So I'm putting an arrow saying that's the same cash number. So if this was $1 million here, you would put beginning cash of $1 million there. Okay? Now, for our income statement, that's the revenues minus the expenses. So I'm just going to write this in here. Revenues less expenses. Okay, now we went into detail on this in a previous video. Gets us our net income. The net income is a number that you're going to see down here in the statement of retained earnings. So I'm going to just put NI, net income. So hopefully it's positive. If it's a net loss, then it would be a negative dollar amount there. Okay. Now, retained earnings over here, our ending retained earnings from this year becomes our beginning retained earnings for the next year. So right there, this beginning retained earnings for the next year was last year's ending retained earnings. So there's a relationship there. Those numbers would be the same. This net income would be added in, okay? And then there might be other activity within the statement of retained earnings, right? So, but once we get all of our activity, we then get an ending retained earnings. This ending retained earnings is what is going to go in our ending balance sheet for the year, okay? So it's kind of interesting. Our beginning retained earnings comes in from last year's balance sheet, and our ending retained earnings that we calculate here becomes part of this year's balance sheet, okay? And then we have one more item here, our ending cash. When we prepare our cash flow, we're gonna get our ending cash balance, and this will actually equal our cash balance on the ending balance sheet at December 31st, 2014, okay? So these interrelationships take place every single year in these businesses. You would take last year's balance sheet and some numbers from there would move into this year's financial statements. And then once we prepare this year's financial statements, some of these amounts will then go into our balance sheet. Once again, this is articulation, all right? Good luck, class. Thanks.